Is Boeing really a stock to buy right now? Will they be able to sustain during these hard times with everything that has happened to them? Hello guys, welcome to another video. If you're new to my channel, then welcome. My name is Adriana Gorin. Don't forget to subscribe and show some love to my channel by smashing that like button for the YouTube algorithm and follow me on my Instagram. In today's video, I'm gonna talk about a stock that is very popular among very investors in the long term and also very popular here in YouTube. I'll analyze their fundamentals with you guys, explain how the company is doing with everything that has happened to them, why this company is so important for the US, and as always, at the end, I will give you guys my opinion on this stock, if I'm planning to buy it or not, and why. I do recommend you to stay until the end of the video because Boeing is a huge company that is being through a lot lately, and I'm going to explain everything in this video. First, Boeing is the world's major aerospace firm. Other than commercial airplanes to the US and 150 other countries, they also offer all these planes and helicopters for defense, machinery and system for space and security market. Also offers services to commercial markets and the government, like engineering and maintenance, supply chain, training for their pilots, data analytics, and other services that you can find on their website. It's important to know that the commercial jet, aircraft, and the airline industry is very, very competitive. Boeing has huge and aggressive international competitors who also want to increase their market share, such as Airbus, which is a European corporation, and the Brazilian company called Embraer. There are also other smaller companies like United Aircraft Corporation, Comac, and Mitsubishi Aircraft. The defense, space, and security industry is also facing strong competitors like Lockheed Martin Corporation's Raytheon Company, SpaceX, and way more international companies. Now, last year Boeing got hit very hard because of a situation they had with a 737 MAX aircraft. This all started when Mr. James McInerney, Boeing CEO at that moment, received a call from American Airlines chief executive saying that American Airlines was close to a deal 200 of Airbus aircraft. Remember that Airbus is a huge competitor to Boeing. So Boeing decided to come up with a new 737 design called 737 MAX, which came with the same degree of commonality, meaning that pilots would not need to be certified on a new aircraft type. The thing was that there was something changed that caused the plane to behave differently. According to this article in Business Insider, by May 2018, more than 130 MAX planes were in service with 28 different airlines around the world. And then on October of 2018, the same year, first crash happened and pilots were able to inform that they felt like the nose of the plane seemed like it was being forced downward. And then on March 10th, the second crash happened with the exact same characteristics. The very next day, Chinese aviation authorities ordered airlines to stop flying the 737 MAX aircraft, and regulators around the world decided to do the same. Nowadays, they are just waiting the FAA certification to fly 737 MAX again, which is expected to be delivered in the mid-2020 this year, but that's uncertain since it's impossible to know if they're gonna give it to them or not. Now, you might be asking why I'm explaining all this very detailed. Well, this huge event made Boeing to have the worst year in at least 3 decades in terms of aircraft orders and deliveries. Also caused Boeing to lose the title of the world's biggest airplane maker to Airbus. And last but not least, the company posted its first full year loss in more than 20 years. And if it wasn't enough, according to the Marketplace article, the crisis at Boeing is showing up in key economic indicators that affect us all. In particular, economists say it means that the GDP won't grow as fast as expected on the start of this year 2020. To put things into perspective, this means that the economy was set to grow 2%, and as of January 2020, they expected it to grow only 1.6 to 1.7%, just because of this plain situation with Boeing. Just imagine how huge this company is and how meaningful it is for the economy of the United States of America. I'm saying that this company is so meaningful to the US because if this company fails, it could have a domino effect where other suppliers will fail as well because Boeing, which it might be their biggest client, is not buying anything from them. And because of that, layoffs could start as well from top to bottom, meaning that Boeing could start their layoffs and failing as a company, and then all the suppliers would start failing and having layoffs as well. Their latest production news were that on March 23rd, they temporarily suspended Puget Sound production operations for 14 days. And on April 2nd, they decided to suspend Philadelphia area operations with return to work on April 20th because of all the virus situation. Now, let's go to my computer and check their valuations and fundamentals. Okay, so let's analyze their fundamentals really quick. I would like you to show first that if you decided to invest in this stock in 2010, which is 10 years ago, you have actually a return of 174.36%, and you would be outperforming the market, which is this light blue line, which is the S&P 500. But if you would have decided to invest in this stock in 2018, which was when everything started, you would actually be down 50%. In comparison with the S&P 500, you would not be outperforming the market, but this is an extreme situation where something really bad happened to the company. So this is a company that has a market cap of $81 billion, and they don't have any PE at the ratio at the moment because they didn't have any net income or earnings last year, which we're going to check later on in their financials. But it's important to know that their average PE ratio, their 5-year average PE ratio is 23.92. Now, for their income statement, they had a total revenue of $76.5 billion. But the most important thing here that I got my attention was that their cost of revenue was $72 billion, meaning that that's calculated $72 billion. $93 million divided by 76. That means that 94% of that revenue that they generated was actually used to generate that revenue. That's the cost of revenue. So that is very high in my opinion, even though this company has a history of having a high cost of revenue, but normally it's between 80 to 84%, and 94% is a 10% increase, which is very fast and high in my opinion in 1 year. And that left us with a net loss of $636 million, which if we check their revenue, they were increasing it year by year, very little until last year, and their earnings were actually increasing exponentially the last 2 years before 2019. Now let's check their balance sheet, which is one of the things that makes me not want to invest in this company right now. I'm gonna explain you why. First, I would like to calculate with you guys the current asset to liability ratio, which the total current asset means all assets that they have available to liquidate within the next 12 months, which normally are cash, inventory, or short-term investments. And we're going to use the total current liabilities, which are debts that this company would have to pay in short term within 12 months. So this ratio, we have to calculate it by dividing that current asset of $202 billion, $229 million, divided by the total current liability of $97,312 million. And that will leave us with 1.05. which in my opinion a good current asset to liability ratio is 1.222. So 1.05 maybe is not that bad, but what I'm going to show you next is a very red flag for me, which means that here the total asset is $133 billion, but they have a total liability last year of $141 billion. And now they have a long-term debt of $19 billion and a current debt of $7.27 billion. Now, I want you to remember those numbers, which summing them up are like $27 billion, because later in the video, I'm going to explain that they actually had more debt on this year, February 2020. So that left us with a negative equity of $8 billion, which all other years they had a positive equity, but it actually was decreasing. Now, if we go to their cash flow, we can see that they had a negative cash flow last year for $4 billion, and it actually was increasing previous years. But now for next year, this year 2020, this company will suspend the dividend payments and also will extend its pause of any share repurchasing, meaning that here in the cash flow, this $4 billion and $2.6 billion that they spent in dividend payments and common stock repurchasing, which is doing buyback, will have it as cash because they are not able to do that. And in my opinion, they stop their dividend and maybe their buybacks, because if they receive the government bailout that I'm going to explain later in the video, maybe that's going to be one of the terms and conditions that the government give them, which is don't pay dividends, don't do buyback. Now, what analysts are expecting for this company is that they're expecting them to increase their revenue this year by 0.30% and next year by 27%. But on earnings per share, they had a negative 3.47 earnings per share, and they're expecting it to grow and have an earnings per share of 0.07, which in my opinion, this is because they are already expecting this company to generate a lot of revenue and be able to sell all the new 737 MAX planes that they have in stock. And also because this company is trying to reduce their costs because of everything that happened last year, and that will also help them increase their earnings. And now next year, 2021, they're actually expecting Boeing to have an earnings per share of 11.73, which what this tells me is that analysts are expecting Boeing to be very stabilized next year, 2021, and be able to continue with their productions as they were before all the 737 MAX thing that happened. Boeing, as of Q4 of 2020, has a total long-term debt of $19.8 billion and a current debt of $7.27 billion, leaving us with a total debt of $27.7 billion, as we just saw in their balance sheet. And on February, they added full amount of $13.8 billion in loans from a syndicate of more than dozens of banks here in the US, which is massive amount of debt for the company. Also, Boeing has asked the US government for $60 billion in assistance so they could support the health of the aviation industry and maintain health of supply chain by paying their suppliers. Basically, they want the government to support them with $60 billion so they could go and support their suppliers. We will have to see what are going to be the terms and conditions for this support that the government is giving to them. In my opinion, their valuation is still not that attractive since I only have available the past results. I would prefer, before making a decision, to see what they show us in this Q1 of 2020, even though it will be really affected because of the virus situation. But we'll like to see how they perform during these hard times and what they are expecting for the future of the company. It's important to know that they are having earnings report on April 29th. And also, one of their last financial reports, they said that their 2020 priorities were to rebuild their trust, operate with excellence, focus on their values, restore production health, and invest in their future. And it's funny because while I was filming this video, this article came out saying that their customers just canceled 150 plane orders, meaning that their demand and revenue will reduce even more. A lot of you guys have been asking me to share my thoughts on this stock and how I feel about it in a long-term investment. I do think that Boeing is too giant to disappear, and the demand for their aircraft will definitely recover when all this situation passes. But the biggest part of the revenue comes from airlines purchasing their planes. An airline cutting their expenses at the moment makes Boeing to reduce their earnings as well. So I don't know if they will be able to meet analyst expectations this year. So if you are someone that already owns this stock, I would not sell it because in the long term, it's a very good company. Let's say 5 to 10 years, it will be able to recover. But in my opinion, I wouldn't buy this stock at this exact moment because of the uncertainty of everything. Would wait until see how they recover and then make my decision if I would buy this stock or no. Right now, I'm giving this stock a 4/10 points just because of their uncertainty and their current balance sheet, which in my opinion is very weak as well. Thank you for watching this video, guys. That was all for today. I hope you liked it and you enjoyed this stock analysis video. Don't forget to subscribe, smash the like button for the YouTube algorithm, follow me on my Instagram. Stay safe, stay home. Thank you and see you next time.